Everyone thinks war moves markets. When tensions rise, people panic. They rush to buy oil. They rush to buy gold. They expect chaos in stocks. But here is the uncomfortable truth. Markets do not move because of war. If news truly moved markets, why were metals already rising long before the headlines? Why was oil building structure before escalation started? News is visible, structure is not. Most traders react to what they can see, but professionals focus on what was already forming. In reality, the move was building quietly. The headline only released it. Let's go back to last year. Gold had one of its strongest runs in years. Now think about how it happened. There were sudden headlines, inflation surprises, geopolitical escalations, central bank shifts. Each time gold spiked, people said that's the reason. But if you zoom out, gold had been building structure for months. Higher lows, strong accumulation, compression under resistance. The move was preparing long before the headline. The news looked like the cause, but it was the catalyst. Here's the important part. There were days when headlines hit suddenly. Nobody knew they were coming. But the upside breakout was already technically ready. You didn't know the news, but you knew the structure. And when the news hit, it didn't create something new. It completed what was already forming. That is how markets operate. You don't need to predict headlines. You need to understand positioning. Because when structure is mature, it is waiting for volatility, and volatility always arrives eventually. Most traders see the event. Professionals recognize the release of pressure. Forget the headlines for a moment. Look at the structure. For months, oil has been building pressure, higher lows, compression, long-term accumulation behavior, not explosive, not dramatic, just quiet preparation. This is how major moves usually begin. They do not start with panic, they start with positioning. Now, here's the key question. If geopolitical tension rises, does that create a trend? Or does it release pressure that was already building? Energy is different from metals. It is directly tied to supply risk, shipping routes, political instability. So when tension increases, oil doesn't move because of emotion. It moves because risk is being repriced. But that repricing only expands in the direction structure already allows. If oil had been collapsing for months, a single headline would not reverse the entire macro picture. It might spike, it might create volatility, but it would fade. However, when structure is already aligned, volatility becomes fuel. That's the difference. You don't need to predict escalation. You need to observe whether energy was already preparing for expansion. If it was, then news becomes the accelerator, not the architect. Most people think markets react emotionally. They imagine traders sitting in front of screens, panicking when a headline appears, but that is not how markets work. Markets reprice risk. That's it. When geopolitical tension rises, one thing happens first. Risk premium expands. Oil traders begin asking, is supply at risk? Institutions begin asking, does this change long-term pricing? Not how do I feel about this, but how does this change probability? Here's the important part. If risk was already building, repricing becomes aggressive. If risk was low and structure was weak, the move becomes temporary. This is why you often see a sudden spike, a strong move, then continuation, or sometimes a spike, then complete fade. The difference is not the headline, the difference is structure. News does not create direction, it injects volatility, and volatility expands in the direction that already has pressure behind it. That's why two similar geopolitical events can produce completely different market reactions. Because the structure underneath was different. If you understand that, you stop chasing headlines. Instead, you start studying positioning and market structure. And that changes how you trade events entirely. There's something most traders never think about. Many major geopolitical events happen outside of market hours. Late at night, over the weekend, during low liquidity periods. Why? Because when markets are closed, there is no live panic. There is no immediate chain reaction of selling. There is time for institutions to assess, time for governments to communicate, time for the shock to settle. Then markets reopen. And what do you see? A gap. Most retail traders see chaos. Professionals see repricing. That gap is not random. It is the market adjusting to new risk. But here's the part most people miss, that repricing still respects structure. If oil was already building higher lows, a weekend escalation may cause a gap up that continues the existing direction. If oil was weak and structurally bearish, the same headline may create a spike that fades within days. The event does not override structure, it interacts with it. This is why understanding positioning is more important than predicting headlines. You don't need to know when something will happen. You need to know what the market was preparing to do. Because when volatility hits, it will expand in the direction that was already dominant. Tension rises, headlines explode, oil spikes, gold jumps, social media fills with "buy now," "this is the move," "war is bullish." Retail traders feel urgency. They feel like they are about to miss something big, so they enter. But by the time they react, the initial repricing has already happened. The gap has formed, volatility has expanded. The easy part of the move is gone. They believe they are early, but they are reacting, and reaction is always late. Here's the deeper problem. They think the news created the opportunity, but the opportunity was there before the news. The structure was already forming, the positioning was already building, the volatility just revealed it. This is why many traders buy the spike instead of building the position during structure. And when volatility fades, they are left confused. They blame manipulation, they blame politics, they blame timing. But the real issue was this: they waited for information. Professionals prepare for expansion. That's the difference. Let's move away from theory for a moment. When geopolitical tension rises, you have two types of traders. The first type asks, what does this headline mean? The second type asks, what was the market doing before this headline? That difference is everything. A reactive trader waits for confirmation from news. A structural trader studies positioning before volatility appears. When escalation happens, the reactive trader feels urgency. The structural trader checks alignment. Is higher time frame direction already pointing up? Was accumulation already forming? Was pressure already building? If the answer is yes, volatility becomes confirmation. If the answer is no, volatility becomes noise. This is how professionals stay calm during chaos. They are not surprised by movement. They are prepared for expansion. They don't need to predict events. They need to measure readiness. And readiness is visible on structure, not on headlines. Instead of asking, is war coming? Will oil explode? Is this bullish for gold? Ask better questions. What was oil doing before the tension increased? Was it already forming higher lows? Was it compressing under resistance? Was it building pressure on higher time frames? Because if the structure was already preparing for expansion, then volatility is simply fuel. But if structure was weak, then volatility may only create a temporary spike. This is what most traders miss. They study the headline. They ignore the positioning. But positioning tells you more than politics ever will. Look at higher time frame direction, long-term compression, liquidity levels, and risk premium expansion. If escalation continues, structure will determine continuation. If escalation fades, structure will determine whether price holds or collapses. That's how professionals think. They don't trade opinions. They measure alignment. And when alignment exists, volatility becomes opportunity. When alignment doesn't exist, volatility becomes noise. So let's simplify everything. Tension may rise, headlines may escalate. Oil may move, gold may spike, but none of that tells you what to do. Because headlines are information and structure is direction. If you build your trading around information, you will always be reacting, always late, always emotional, always uncertain. But if you build your trading around structure, You stop asking what just happened, and you start asking what was the market already preparing to do. That shift changes everything. You don't need to predict war. You don't need to guess escalation. You need to identify alignment. When structure is not aligned, volatility becomes noise. This is the difference between reacting to markets and understanding them. And this is exactly what I teach inside the GPG Forex community. Not predictions, not news trading, not guessing headlines. We focus on identifying structure mechanically. No drawing random lines, no subjective bias, no emotional interpretation. Just a clear direction defined by a rule. Because when you remove guessing, you stop fearing volatility. And when you stop fearing volatility, you start using it. If you want to learn how to read markets this way, the link to join the GPG Forex community is in the description. Thank you for watching. Make sure to like and subscribe for more structured market breakdowns coming next.